actually talk about how to attract money into hotel investments. We're calling this the investor perspective, alternative structures for finance and sources of funding for hotels. How do you bring in capital into these hotel investments? Well, I'm delighted to say that chairing this discussion, please welcome Teija Ros, who is Managing Director of Strategic Hotel Consulting. So Teija, I'm going to hand over to you.
Thank you, Stephen. It's nice to see you again here this year. So good afternoon, everyone, and welcome to our session on hotel financing. This is one of those topics that when I initially said to my industry colleagues we're going to have a session on hotel financing, the reaction was, what's that? Does it happen? So we're going to find out what's the current situation of hotel financing in the Gulf, and we've got a fantastic panel here today. So let me just start by introducing them. We have Cyril Piaia, who is Associate Partner from Stratford and Russell, based in Oman. Augostino Sfeir, Chief Investment Officer of United Real Estate Company from Kuwait. Patrick Smith, Chief Operating Officer, IFA Real Estate Services, based in Dubai. And Shuja Zaidi, Principal Equinox Hospitality from Saudi Arabia. Doesn't get better than that. Please welcome them on the stage. I think they're just being mic'd up here, but we've got Augostino is arriving. Okay. You could, yeah. So while we are waiting for everyone to get set up here, let's do a quick poll here between the audience. Who thinks that hotel financing is hard? Who thinks that it's harder today than it was 5 years ago? Okay, I'm even seeing double hand here, so I think that's a sign of something. But we'll look into that in more detail. So Augostino, we'll get started with you a little bit here while we wait for your colleagues to come here. You've just arrived from Kuwait.
Yes, actually.
Good.
We arrived yesterday. It's amazing networking, very professional, useful as well. See a lot of conferences, left, large center. However, this one is can be very beneficial even for investors.
Yeah, very good. Yes, I think Augostino, they have about 1 billion in real estate or hospitality, only hospitality real estate. So they are very active on the field, as are our other panelists. So what's your view on hotel financing in the region? Is it working for you in Kuwait?
Actually, we're in Kuwait and in the MENA region. We have from Morocco to Oman as well. It is challenging, not easy like before. Banks are a bit more sophisticated, especially after their experience. So we had to find other ways of diversification and syndication. So it comes with a lot of challenges. Corporate governance has to be more enhanced.
Yeah.
Being alone, it's like marriage. At the beginning, it's very shiny, but eventually after that, you have to maintain certain trust, so they will come with you.
Good. And then you work out your differences, and it all goes.
Exactly.
You find a good path. Excellent.
Exactly.
Excellent. Very good. And what are you seeing that it's the let's say lending environment? Is it getting easier or harder in the past years?
Definitely not. Regulations, IFRS 9, Basel 3, banks are already overexposed, real estate and hospitality in certain jurisdictions. So it is a bit tight. They would like to see more equity coming. Yeah. That's why as well we go back into finding a way of bringing investors with you.
Yeah.
I would like to tackle, now it's a bit promising. We have real estate investment trust being very active in the region. Saudi Arabia, we've seen 17 already listed, 2 in UAE and 1 in Bahrain. So basically, if you create your own portfolio, that will give a promising exit for any institutional investor in the future, despite of the challenge that exists. So you don't need to sell underlying assets.
Yeah.
You can list the whole package.
Okay. So you find that the REIT is the way forward for your group?
For our group and for all the developers,
Yeah.
there should be no ego anymore. De-risking is very key. So you need to let go some of your profitability to others, but it comes with a lot of revenue-driven or net income-driven.
Yeah.
So cost control, governance, it's not your own asset anymore. Okay, you lead, you have a big portion, but you have others as well.
Yeah.
So you have to have the setup for that.
Fine line. Okay, understand. All right, I think we might have Cyril ready and set up there. So let's welcome you here as well, Cyril from Oman. So what's the scene in Oman, Cyril? What are you seeing there in terms of hotel financing? Are you seeing capital coming in?
Well, like everywhere else, I would say it's a bit challenging these days in terms of finding capital to develop hotels in Oman. It has been a bit difficult. So, but we are trying to support our client finding some financing. We are developing some alternative way of finance hotel development, which I will explain later on the panel.
Yeah.
So it's promising. We try to find alternative solution. I think that's the idea.
Yeah, I think you have been involved on things relating to cryptocurrency and blockchain with some of your...
More actually blockchain, crowdfunding to support the financing of hotels, I will explain that.
Yeah, and is that something that you see that it's working well?
Well, it's very early stages. There is a number of obstacles to develop that. It's mainly the regulations in the places where you are planning to launch your crowdfunding. You need to be careful to a number of steps to comply with, but it's very promising. 2019 will be the years of security token offering, so I think that will be a very interesting time for hospitality as well.
Yeah.
Is that useful?
So we can welcome the rest. We have Shuja here and Patrick. I'll move over to this side. Okay. So we got a little bit of few extra minutes there to elaborate on the topic. Okay, let's now that we've looked at a little bit of Oman, let's just speak to you briefly, Shuja, here. What's your experiences in Saudi Arabia? We're obviously hearing a lot about development in Saudi Arabia, and there's a lot going on. What's the situation with financing there? Do you see that there is capital available?
Yeah, Saudi Arabia is going through a tremendous transformation in terms of tourism in general. And hence, all sectors are firing right now into their full capacity. Hospitality, tourism has got a special focus in line with the Vision 2030. And the government has put out their best efforts. And it's just now, what we are seeing from hospitality aspect is a very keen interest from government. And here where the alternative investment vehicles come in, REITs are popping up in Saudi Arabia like they haven't done before. Very well regulated, very well streamlined. And the portfolio managers who typically used to look at hospitality as a stabilizing vehicle for the rest of their portfolio are starting to see it as something they can count on. The government support in all the large projects that you hear about, Qiddiya, Neom, Red Sea Resort, these are some of the ones that I've mentioned, but there are a lot of micro level within each city that's going on. And the government has put out whatever they can to help investors come in and put especially the hospitality assets out.
Yeah.
And that's started to roll now. So there is a lot of government alternative support coming in many forms, starting from equity or part of the asset as land and so on. So this is something very new and very, very encouraging in Saudi.
So it's a very interesting point, because we've heard a lot of developments in Saudi, and it's kind of been looked at like now they're catching up with what the rest of the Gulf or UAE has been doing. But actually, when it comes to some of the financing methods, already from our discussions, it seems that there are many areas where Saudi actually has been on the leading edge already for some time with the REITs and regulation and so forth. So that could mean that once all the development really accelerates, you can go fast because you've got the systems in place.
Yes, and the players, international players, are coming in to see all of this, and they're hand in hand with the government and local entities to go.
Very good. So Patrick, what about UAE? What are you seeing? You're obviously based here in Dubai. You've been here for a very long time with the IFA and before that. So you've seen a lot of the cycles. You've seen a lot of different market conditions. What's your view on current climate in financing, in particular in the UAE?
Yes, so we've been here a long time. Practically, still there is a financing market here, obviously, but it's tougher. Banks are wanting visibility on what the outlook's going to be, elements of being unpredictable, and tightening given obviously the challenges that have come before. So whilst it is still available...
Hold on just a second. I think we have now... Is it correct that you cannot hear? Correct, yes. Can we just have a look on the mic situation?
No.
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 Actually, I don't have this. I can.
Could we have someone maybe to come and have a look at the mic for Patrick? So, okay.
Can you hear me now? Can you hear me now? Hello?
Yes.
Can you hear me?
Yes, there we go.
You don't want to miss this priceless information.
Expectations are high now, Patrick.
Okay, I'll start again. So, yeah, so EFA's, we've been based here, I've been here for 15 years, to be honest, our financing initially was predominantly a lot through residential sales, which obviously alleviated the requirement for much of the debt. But practically we have debt in place. It's clearly much tougher now than it was, but it is still available. I think the challenge is that now there is more of a requirement for much steeper payments in terms of the repayments on the loans to be paid back, which the hotels under these climates are finding it hard to repay on those levels. That's not to say it's not here, it's just it's difficult to predict going forward. It is a cyclical business, the supply coming into play, so they're looking for the bigger companies, they're looking for stronger sort of securities against that, so it is still available, but it's just much harder to obtain.
Yeah. Okay, so let's say if you've got a project in this region and you want to get the financing for that, what is it that you need to bring to the lenders? How do you get financing? How do you get capital? It used to be the feasibility to the banks. What do you do these days?
Well, I must say that the good old days of an hotel developer coming in with a nice feasibility study with a nice name on top, and it's just over. First of all, the lenders, the banks are getting much more educated about the industry, about hospitality. They are much more picky on the figures. They understand how it works. They have actually a business case in the past. They know, they even sometimes hold assets after some foreclosure. So they know how hotels are running. And the idea of having like a kind of rosy picture into a feasibility study just doesn't work anymore. So it's much more complicated, and I think finding an alternative way of financing is the way forward. Of course, of plan selling, and from my side, crowdfunding is also an option.
Okay, all right. Any other thoughts from others in terms of what do you need to bring to the table to make it interesting? For the banks? Well, actually, I will go back to the same story. They would like to see equity injection. Yeah. Okay, they cannot rely on, and to have big projects at the same time, you need to bring investors again. So you need to set it up in the proper way. You have to create the trust for the investors. You cannot act as a developer now. You have to be a financial engineer. So for the banks, they would like to see pumping in the system, cash from the investors. So you should not expect, even if you sign with them, with a bank on a term sheet, you will not get the funding or the drawdowns
before they see actually big improvement in the construction, which is from your own equity. So that's why you need to package it in a way to bring investors with you from the beginning without relying on banks at that stage.
Yeah, I understand. If we look at hotels as an asset class, do you feel that hotels are more difficult to finance? Is it harder to get capital into hotels than compared to commercial, residential?
Well,
Yeah, I'd like to point something out here. In traditional places where hotel industry has come of age and they've been there for, the asset class is now identified as something very long term, as I was saying, a stabilizing of the portfolio type assets where REITs come in, pension plans and so on. Banks finance an asset for 30-year amortization. Here in the Middle East, you have a 10-year window financing. They give you a couple of years grace, and then you have to pay. Sometimes, and especially in times like this, it's a very challenging environment to do. In, for example, in US and most of Europe, you see the financing plan just stays in place, even though the title deeds may change hands. That's fine. But the financing stays in place as a fixed income almost coming out regularly for long-term investors. If that kind of model can be adopted, I think we can see a lot of growth in the new asset class. In other words, where there's a return which is reasonable. Yeah. And if someone is interested, you always can bullet the payment or balloon it and get out and change completely the whole formula. But a 30-year mortgage makes things a lot easier, lets the hotel breathe and come to a full stabilized year, and you start making payments as regular. I believe that needs to be adopted here in the Middle East.
I agree.
Okay.
And to answer your question, in terms of asset class, I think hotels are not the easiest for two reasons. The break-even period is quite long, and the expected internal rate of return is lower than any other industry. It's like if it works well, 10% is quite good, 10 points. So I think, as my colleague is saying, we have probably to educate the bank into align the interests of the developer in the first years of the operation, where actually it's the most difficult. In some hotels you are bleeding money, and very shortly after opening you have to do a refinancing. Mm-hmm. And this is what these kind of things are not really common these days, and I think we have to push it forward.
Okay.
And just to add on to that, I think within the sector itself, within hotels, there's obviously during the development period, if it's a new build, and then the financing once it's up and running. And clearly there's two very, very different profiles for those pieces, right? And yes, you know, getting a couple of years grace whilst the thing's being built, but then we all know it takes 2, 3, 4 years to get the thing up to speed. So it's a real challenge, and there's different financing, and I think the more creative financing is required at the early part, which is the hardest, where Resi or other sources, once a bank can see the hotel's there, it's physically there, the development risk has gone away to a large extent. Or even if the main structure's up and it's buying an older property, refinancing and upgrading, that's less risk than just starting from scratch, right? So,
I would like to add, in a nutshell, it is for me, as a real estate investment company that had developed a couple of hotels, it's the most challenging because it's not straightforward. Your return is from operation, actually. Yep. So you have an operation leverage, which does not exist on other asset classes. If you go to an office, it's rental. If you go to residential, you can absorb part of the financing equity from off-plan sales. That applies again for offices, for retail. But for hotels, you have to manage and you control. And unfortunately, it's not within the landlord. It's within the operators. So it's a very challenging, and banks need to understand that, okay? So that's why you need to be creative at the beginning, to confirm on what Patrick said, is to create a vehicle to bring everybody pump in the system and move on.
So let's talk about this creativity for a while. So it kind of sounds like so far so good, financing is available, but it's not so it's not so easy anymore. Got to be a little more creative. So how do you do that? How are you more creative? Let's talk about you first, Patrick. You've done with IFA a lot of focus on the residential, so you've used a lot of branded residencies to bring in some of the initial capital. Is that the model going forward in the Gulf?
It's still there. Again, it's much harder. But in the early years, we were very fortunate in the timing. So the mapping the cycle to that is important. But in any regard, you are able to sell off plan. It's obviously tied to restriction with escrows, etc. But still, the ability to unlock value, which would diminish the equity requirement through sales, particularly during those tougher years during construction, is obviously very powerful. And yes, that can obviously ultimately enhance the returns. So for us, it worked very well. It's harder now, but still, it's there. It's just being realistic and forecasting more conservative sales accordingly.
Yeah. So I was just, for interest of numbers here, I was looking at some of the branded residence numbers. What has been sold globally? How much of that has been in the Middle East? And then looking at a sort of average price of that. Anybody want to take a guess what sort of an average income generation relates to branded residencies in the Middle East region? It's about roughly 10 billion. So I think there's quite a lot of income that can be generated through that vehicle, and IFA has been very successful in doing that.
Yeah, and I think what we're seeing now is the traditional branded residences was very much at the upper end of the market. I think that's getting much tougher, but there's no reason for branding of residential mid-tier. For example, we own a hotel group called Yotel. We have a brand called Yotel Pads, which are quite cool, affordable luxury, we call it, but it's mid-market, and we've launched a project in Miami outside of this, but it's been a phenomenal success, and they're doing the second one. So it's the same concept applies, but it's the correct positioning of that attributed to the market. I said earlier in one of the other sessions, it can't all be 5-star. We need to move into mid-market and more different parts of that asset class.
Yeah, absolutely. Now, Shuja, in Saudi, a lot of the development and the investment has been driven by these public-private partnerships and vehicles. Is that the way to bring in capital into investments?
Definitely. For the newer projects, yes. But also, even in traditional projects, there is still private equity available if you can make a viable case. One problem that we constantly face, our investors, and I think it's true for all of Middle East, they're sort of spoiled. Yeah. They're used to very high number returns. Absolutely. I think everybody needs to come down to the ground, and it's a natural phenomenon. When a market matures, those returns disappear, so do the risks. And you have much more stabilizing factors come into play. Stabilization also means you don't have these erratic movements. You have a much solid, a little bit lower, quite a bit lower, but stable returns. As long as the investors start to realize that, now the new class of investors we are seeing, especially the equity people who are going into hospitality, do understand this. They are okay with lower returns and longer period of return rather than a quick turnaround, 20% IRR on a project or something. So this is what's happening. Public-private, yes, that is very much of the government's goal to the tremendous amount of Saudi travel to foreign destinations. They like to cash in on that, and that capital is available. But also, I think Saudi is coming of age in terms of equity from the investors.
Okay, all right. Now, in Oman, Cyril, you've already mentioned a little bit that you've been exploring some of the sort of blockchain crowdfunding methodology of raising finance. What's your experience with that?
Yeah, absolutely. Actually, we come from the assessment that hospitality as an asset class is a perfect match with a blockchain type project. And here I want to make a differentiation for those who don't know about cryptocurrency is only a use case of blockchain. You have blockchain supporting many other industries such as healthcare and so on. So hospitality, why is it so interesting is that it's asset-backed. You have been seeing in the last 2 years a huge hype about ICOs, people raising money for very smoky, ookie-pookie type of project and then disappearing. It's no longer the case. What's happening now is that there is a new wave called security token offering, where basically a developer can actually issue some securities to finance a project. And the beauty of those security token offerings is that they have to be asset-backed. It's very important for the trust and for enabling the funds to come in. And an hotel is an asset. It's a real asset, and you can allow your investors, which are accredited investors, is people. There is a KYC and AML procedures. Those people are identified. You are communicating with them, and basically this is how you move forward. It's a very interesting way of getting funds because it has a global reach.
Yeah.
It has a very systematic, automatic way of functioning through the blockchain, so it's very secure. It's a distributed ledger, so there is no way that there is any hack or anything like that. And in the end, it's enabling investors of a smaller size type who are maybe risk adverse to invest small amounts and to be part of the project. It's real estate tokenization, and it's worked quite well. You need to take care about numbers of points, typically regulation. You need to be compliant with capital market authorities regulation where you are issuing those security tokens. But I think it's really the future. When you look at 2019, it will be the year of the blockchain, in my opinion. And there is a real perfect match with hospitality. I think that would be the way forward. Of course, this cannot finance the full development. It's an add-on. You need to have still institutional investors being the project, but this is a good complement.
Yeah. And I think on that field, the region is actually quite advanced compared to where rest of the world is in terms of you already have big significant players here with the MR that are using this sort of format. There was a big conference last week, so that could be a way forward here.
Absolutely. Smart Dubai is a good example, and Emirates is willing to be in 2020 the capital of blockchain. So.
Correct. Okay. And then for you, you already mentioned that you're a big believer on REITs, and that's the way.
I wouldn't say it's creative, but it's an alternative, and we're talking relatively to the region. It's something new. Yeah. The $1 million question is, what's the difference between a REIT and an operation company in the hotels? Unfortunately, we've seen hotel companies, investors in hotels, supposed to be, end up with portfolios in the stock exchange. And with the REIT regulations, you are stuck and you will be an investor in the hotels. You have to distribute, not under the mercy of the major shareholder. It's by law. You need to distribute dividend for investors. So that's the comfort, that's the trust, but not the trust because of the name of the major shareholder. It's the trust of the regulations.
Sure.
So basically, what we're trying to do is to reach to that level where regulators and yourself, which is self-managed, to bring these investors with a regulatory framework that you will end up at all levels only investor in hotels. So that's basically a major difference, because we've seen hotel companies doing any sort of others. It's much easier. We go back to the question. It's much easier to be in residential because you have the offline sale.
Yeah.
So no, will be a hospitality REIT. You know that you're going to get the dividend from the net income. You have a challenge to please everybody, to keep on pumping new cash, bringing new investors. So I wouldn't say it's completely creative, but it's a new model for the region,
format,
and everybody needs to follow suit.
Yeah. So talking of format, we're going to change a little bit our format now here, and because it's afternoon, I know it's getting a little bit late. So we try to spice it up a little bit, and we're going to do a few rounds of in a format where I will ask our panelists to complete the phrases for me. So I will start with the sentence, and I'd like you to be very spontaneous with whatever comes to your mind, just to give a very quick final answer or word to the sentence, and we'll run each of the phrases through each of you. So we'll maybe start with you, Augostino, and run through this way, and then just whatever comes to your mind. There's nothing right or wrong, but it's just interesting to get your views. So let's start. The current state of financing in the Middle East is
Very challenging.
Challenging.
Bad.
Tough.
That's not good. I think we got the message there. The most promising alternative structure for finance is
Blockchain.
Government partnership.
Contractor financing.
Very straightforward. Private placement for partnerships between developers.
Shuja, we start with you. I wish the lending environment was
Longer a term. 30-year term.
how long? All right.
More flexible.
I will agree with Shuja. Simple. For hospitality, it should be longer.
Okay.
It's too tight.
Yeah. Longer and sweeter.
Sweeter even. All right. Okay. Okay.
Do we have banks among us?
I think not. They've all left now.
Yeah.
The ideal, that's for you, Patrick, the ideal debt equity ratio is
Ooh. Zero debt.
ooh, 0. Okay.
I would go for 40%. It's lower than before.
40 in debt.
40 in that, which is more conservative than before, but 40 is good.
Yeah, okay.
50-50 aligned interest.
Okay.
50-50, I would concur, yeah.
That's interesting. So I'm based in Switzerland, and whenever I have this discussion with investors and banks there, it's always 60-40. That seems to be so. Actually, you guys are here more conservative for once than the Swiss. That's something.
We are aware about what we can get.
Not realistic.
Maybe
What's
realistic.
working, yep.
Okay. Back to you, Augostino. To secure financing, the most important thing is
Trust.
Understanding.
Say that question again, please.
to secure financing, the most important thing is
Accurate feasibility.
Yeah, reputation.
okay. In 3 years' time, hotel financing in the Gulf will be
Through blockchain.
more difficult, less difficult.
I hope, yeah, we hope for the best. So I hope it will be easier.
Yeah, I concur. Easier.
More promising, of course.
Yeah, more understood.
More understood. Okay, that's interesting. Regional question, starting with you, Shuja. Within the GCC countries, the country where capital is currently most available is...
Saudi Arabia.
Thank you.
Actually, anyone can answer that.
I think that actually gets... let's hear.
Saudi.
Saudi Arabia.
Yeah, I concur.
At least we agree on one thing. And what about the one with the where the financing is least available is...
Yeah.
Difficult to say. Huh?
Yeah. Iraq. So, yeah, I don't know.
I would go Bahrain.
Yeah,
It's
okay.
challenging.
Yeah, probably the same. Huh?
I don't know.
It's not Saudi.
No, it's not Saudi. That's an answer.
Okay, fair enough. Fair enough. All right. Okay, let's talk a little more about some of the alternative structures that are being seen now. I know, Patrick, you've had some interesting experiences with using the crowd financing with the hotel, I think in North America market in San Francisco, if I'm not mistaken.
Yeah, it's quite interesting. It's quite so in our hotel in San Francisco, in the limited partner side of the equity, there was a slither done through crowdfunding, which I mean, it wasn't massive. It was $5 million or something. Can you still hear me?
Yeah.
Yeah. Okay. But it was used for a bit of equity, but also it brought some ownership in from the individuals. So it's quite a funky area in San Francisco. A couple of hundred people bought in a stake, so they feel like some ownership as part of that equity, and some brand identity was acquired for that. And it was very successful, and they're going to look to do it again in other ones as well. So
in this region, maybe?
Possibly. We are developing one on the Sheikh Zayed Road at the moment. No, but possibly. But it was quite an unusual. I hadn't personally heard of crowdfunding in a hotel of substance.
Yeah, okay. And we spoke a little bit earlier about the construction financing and that model. Is that something that you're seeing more in this region? Is that a big thing?
We're involved with obviously the Chinese contractor are very active on that. So we're in the process. We cannot disclose names, obviously, but as a real estate developer.
Nearest and dearest here.
Sorry.
Just between the nearest and dearest.
But yeah, it's very important. Actually, contractors, Chinese, are even equity investors. So it's a hybrid relationship. That gives as well an extra push, and which will lead some banks, Chinese banks, to come on board as well.
Yeah. I concur. It's a very strong way of alternative financing. But I would say, just to balance it out, we have been doing projects with Chinese construction companies. It's also tricky because of this hybrid relation to make sure that the product delivered is right. So you need to ensure the right quality, the right products, and the right element in there, and the right cost, of course. So that's challenging. That's very challenging. You need to set up some procedures from the start to make sure that the interest of the owner, of the developer, are protected to the end.
Corporate governance is very important.
Absolutely.
Okay, so coming back, it's the regulation again, and coming back to that. We've got a few minutes left here, so let's just see if we have anyone who has questions in the audience, perhaps.
No question.
We've got no questions. Well, you know what it means, guys. Then we have to complete another sentence. So let's see. This is where the final sentence is. We're starting with you.
Question.
Oh, okay. Well, still need to complete it, but let's hear the question first. Right in the end there, I see a hand up.
Are you aware of any? Are you aware of any local capital market authorities considering?
The question.
Yeah.
You can hear it?
Considering blockchain?
Because I don't have the...
So are you aware of any local authority,
Capital market authorities.
capital market authorities in relation to blockchain
Well,
or crowdfunding?
or crowdfunding?
if you talk about Emirates, I guess, there is already a framework for Emirates that is developed through Smart Dubai. But actually, the important thing is the regulation of the issuer of the token offering. So it's depending where your company is established. You can have a project in Emirates and have an issuer somewhere else. So that's, the question of regulation is quite complicated. We are usually advising our client to do a private token offering rather than a pure security token offering, which means listing your token on a listed exchange, which has much more consequences in terms of regulation. So the best way to do this kind of crowdfunding is probably just a private placement to an accredited investor, and avoid those kind of very tough regulation issues that you can get on exchanges.
Yeah. Okay, any other questions? Okay, then we're running out of time, so the finals complete the phrase. The Arabian Hotel Investment Conference is?
Perfect.
It's cool.
Great.
Fantastic.
Love it. Excellent. Thank you for the audience and for the panel.